Alright guys, this is your recap for February 15th, 2017 of the E-mini S&P. We saw what was happening this morning. If you watched my video, if not, it was pretty long because I went through all of this morning. Even though right here it was showing that it was at an area to take a short trade, if you attempted the short trade, it was not going to last very long. You would have to get out pretty quickly. By this time, you've gotten back above everything on the 610, and your 1597 was showing a lot of strength going to the upside in the MACDs. So really at this point, I'm starting to look for the long trades. Now, I was a little late getting in on this long trade because I really saw the opportunities here. Once it sat for a little while, I went ahead and got in, and I didn't pay attention to news. News spiked it down and stopped me out, which is absolutely fine. Now, a lot of people would be thinking, oh, well, the direction's changed. We've got back below everything, but that is not the case. What we're seeing is just an erratic move because of news. And I'm going to take this off so you can see this a little bit more clearly. And I'll talk about all these arrows that I have on here because I discussed them in the other video. This long bar with the close at the top being above the zero line says start looking for the long trades as soon as possible. It pulls back into the area. I get into the trade setup. It actually gives you several opportunities to get into this trade setup. You could have done it anywhere along here. You could have done it here. There's so many opportunities to get into this. Okay, so, there were plenty of opportunities to get in along the way, and then as it's creeping up, what's happening is, when I had gotten into this trade, my stop was going to be way back here, and as it's creating new lows, you can move that stop a couple ticks behind there. I was looking to move my stop a couple ticks back here. I actually did have my stop a couple ticks back here. And I moved my target up just a little bit more. These green lines that we see here represent the Fibonacci extensions and to show your next targets. So I put some arrows here, which it kind of, when I had it here, it was a little bit more, spot on, I guess you could say. I may have, there we go. But you can see I put arrows as it hit each of these targets, target areas, where you could possibly get out. This one I was showing was a 233 trade that Marina would have taken. There's your point target. If you don't take the point target, then this is when it's starting to show the possibility to pull back a little bit further, which is right at the same spot at a point. I don't recall what this arrow was there for, to be honest with you. Oh, I do recall now. I don't recall what that arrow is there for. I think it was something about, I think I had a green arrow right here actually and said that, my personal pain threshold, I would have been out pretty quickly because I don't like taking trades off of the 233. But if you hold on to that, you can take them to each of these next Fibonacci levels. With the strength of the market to the upside, you see you've got a lot of distance, a lot of spacing. So there's a lot of opportunities with these 233. It's just not something I'm super comfortable with. This arrow is representing once it hits the line, an area to get out of the trades. This one actually, they kind of moved on me a little bit after that one was actually back there. And I did have a green arrow right here, so I don't know what happened to it. But anyways, so really, if you miss that entry to the trade and you're very cautious about what you're looking for your exit, what happens is it breaks that one area and then it pulls back to it. Pull back to it right here, right? It broke through the next area and then pulls back to it. Breaks through that area, then pulls back to it. So it gives you a lot of opportunities. Now, when you're looking at this one here in particular, don't want to erase that. Look at the strength of the MACDs to the downside. They are smoking to the downside, which tells me that I need to be a little bit more patient. I may have looked for a trade here, but I'd stopped trading by that time. And then what I was showing here is, look what's happened with the price and the MACDs here. The price has come down. It's come back up. This is about, 75, 80% of that move. But here's what your MACDs did that entire time. That's what, like 25% of that move. That means that the MACDs are saying you've had a strong push to the downside and a weak retracement, which says that, hey, we may be looking for a shift change at this point. And it does change the trend. You get pushed to the downside. I probably would not have taken it. There's not really anything in here to take. This pullback doesn't give you enough room down to the 1597 EMA. And then it kind of gets wishy-washy for a little bit, going above, going below. And what happens here is what you can see, one of the biggest indications to me that this is no longer going to go to the downside. Number one, we've had an extremely strong trend to the upside. And number two, these EMAs kind of stay in line. Your 1597 stays below the 610. The 610 can't breach it to say that we're going to start looking for trades in the opposite direction. That's something that I definitely look for all the time. Also, your price comes down, goes up, comes back down, comes down in big ways. Look at the MACDs on your 1597. They're hardly moving. Now, as you start to get that confirmation that it's back to the upside, then you can start looking for long trades again. Also, being very, be very quick about your exits at these times, and it's just been kind of that way lately that you might want. You're either quick about your exits, or you know how to keep your stop trailed and watch for any change that might say it's time to exit this trade. That's straight to the downside right there. All right. So then it pulls back into the 1597 EMA. The angle of this EMA tells you a lot, that 1597. It flattens out here for a moment. It doesn't really start to move to the downside, but it starts to pick right back up. All right. It starts to pick right back up to the upside. So it pulls back in, and I know I do have some students that would take this trade as it pulls back in this area, or possibly waiting for here. Here is my love it entry. Once it gets back above everything, gives you a really quick pullback. The MACDs don't do much, and it continues to the upside. So you can see the strong trending market, nothing changes. Even if we get below everything like we see here, we still have that strong trend to the upside. The MACDs on the 1597 are well above that zero line. You have a lot of strength and momentum pushing in that direction. We did get a little bit of retracement divergence here, which pushed you back to the area. And then once again, and this is something that I'm working with, you get all these areas, all these bars that pull back into the 233, and possibly even if you're looking to get in from the 610 EMA, there's a ton of opportunities throughout here. All of these are entries that are possible. Even something possibly right here. Marina would go for her point and be out. I would be holding until I saw weakness in the MACDs, which would probably be about right here. Be like, it's time to get out. My MACDs are going down. There's that little hiccup of a pullback while you've got a semi-decent pullback here. And look what happens again. It crosses everything, it goes back below. Technically, you've changed your momentum to the downside here. But look at these EMAs again. The 610 above the 1597. You still have a lot of distance and spacing between them, which says it's not going to continue in that direction. It is starting to get close to the end of day here at this point. I mean, look here. Look how clear that is when you're looking at the 1597, how it just pulls down. That's like the third area. So you have the first area you can trade from is the 233, second area is the 610, third area is the 1597 when you're looking for entries. By this point, you're getting really close to the end of the day. Marina did take a trade here. I'm sorry I didn't discuss it because I struggle with reversal trades. I think she got in right here. There is also the pullback in this area, and you would definitely want to be out the moment it hit that 1597 EMA. It does give you some more opportunities right in here, but this is just a few minutes before the market closes. And so you probably don't want to be in them, but just so you can recognize them whenever it does happen, it pulls up maybe here, here, or even there as an exit. So that pretty much wraps up what happened for today, how many entries you could have had along the way. And a lot of these entries, you're probably curious as to why I picked them. They're things like reversal bars, and here's a reversal bar, long bar, long flag with the ball at the top. There's a floor created here. There are double bar reversals where the double bars happen here. This one right here that closes at the bottom and has a little bit of a flag, that's a reversal bar for me. These are reversal bars here. That's exactly what's happening here as well. So all of these are just indications and areas, and if you're trading from the area also, you have that to go with as well. But double bar closing, pushing up towards the top. Double bars closing, they have the same low, but look how they're pushing up towards the top. So that's what I'm looking for when I see those entries at those times. So, and you can see all of them pretty much work that way. I may have put a couple of these in the wrong spot, but pretty much for the most part, I would see that reverse bar would be the next bar that I'm trying to get in on. I'd see this pull back without a lot of activity going here. I'm looking to get in soon. So that is your recap for today. What is today again? February 15th, 2017.